US Treasury securities are among the safest and most liquid assets in the world. They are the benchmark instrument that investors use to gauge economic stability and to diversify portfolios. For decades, foreign investors have flocked to US debt as a safe haven asset. And among these, Singapore. We are a small city-state with a robust financial system. But we also have emerged as a significant holder of this US debt. Here's a graph on the largest holders of US Treasury securities, which is taken from the data from the US Treasury. As of late 2025, Japan leads with around 1.2 trillion, followed by the United Kingdom at about 878 billion. And approximately 689 billion is held by China, the lowest for China since 2008, and especially for such a big nation. Singapore actually holds a substantial amount given our small size and GDP, which is estimated in the range of 250 to 260 billion. Larger than much bigger economies like India or South Korea. In recent years, Singapore has been steadily increasing or maintaining strong holdings of this US debt, or treasuries, even as overall foreign trends show a lot of changing tides. You contrast this with China, which has been actively reducing its US debt exposure. China's holdings have fallen sharply to around 689 billion in October 2025, down from over 1.3 trillion at its peak. China has of course been unwinding all of these positions, either through outright selling in the bond market, the secondary market, or letting them mature without reinvesting, as part of broader de-dollarization efforts. What does this mean? China basically doesn't want anything to do with the US dollar. So Japan remains the top holder with steady or increasing positions around 1.2 trillion, often to support currency management. This has a lot to do with the yen carry trade, and it's also why the BOJ has been increasing rates recently, which I'll talk about later. So why is Singapore continuing to hold and accumulate US debt while major economies like China are selling? To understand this, it is first important for us to know what exactly is US debt. US debt are basically US Treasury securities, and they include bills, notes, and bonds. These are debt instruments that are issued by the US government to finance national spending. Buying them means lending to the US, which has always repaid, making them essentially risk-free. Why have they always repaid? Because they can just print more money and pay you back in. But that's not the only reason. Safety is just one part of the equation. The other parts are liquidity and the dominance of the US dollar in global trade. Liquidity is a major reason why Singapore actually still holds US Treasuries. Of course, we do hold other things like gold, but this US Treasury is still a form of liquid gold. Liquidity means how easily an asset can be bought or sold without significantly affecting its price. US Treasuries are among the most liquid assets in the world, widely traded, easily convertible to cash, and accepted as collateral everywhere. Gold, while a store of value, is not as liquid. You have to store them in vaults, right? And selling large amounts can actually drive down prices or take a lot of time. Then there's yield. US Treasuries offer reliable interest payments, a form of steady return or dividend on your assets. Unlike gold, which generates no income and just sits in reserve, these treasuries provide yield because you can be sure that the US government will pay you back for lending them money. For Singapore's large holdings, this means billions annually in interest, depending on the rates right now. But this income can actually be reinvested or used to support national priorities, like through the net investment returns contribution in the budget. That's why some portion of our CPF goes into our sovereign wealth funds like Temasek or GIC, and some portion of these assets are actually bonds. So if you are contributing to the Singapore society and economy, you're a salaried worker, some form of your salary is actually going into US bonds. Singapore as a global financial hub managed by the MAS, Monetary Authority of Singapore, doesn't just preserve wealth, right? Our goal, right, is to maximize efficiency with assets that are safe, liquidity, and income generating. There are a few mandates, just like the US Fed. We actually just want to generate more income, and US Treasuries are a very good way to do so. Now, to really see the contrast, let's look at China. Why does the Chinese dump US bond, right? Why do they continue doing so? Simply speaking, China sees little incentive to hold more US debt, because their situation is very different from Singapore. They are one of the US biggest rivals, and why finance your biggest rivals amidst what Trump is trying to do to you? He's trying to initiate trade wars, he's trying to do tech restrictions, and he's also trying to sanction, right? Why is this so? Beijing is pushing hard on multiple fronts. Of course, they need to respond to the massive tariffs that Trump has imposed. They also need to strengthen BRICS ties. But another reason is to accelerate the de-dollarization. This movement is also to become more resilient and less reliant on the US financial system. And of course, to encourage more uptake on the yuan. That's why we have petro-yuan trades. They're trying to encourage trade of oil through directly using the yuan. That's exactly why we're seeing this big shift. China doesn't want anything to do with the US dollar anymore, and they are steadily reducing treasury holdings to suppress and kind of destroy the dollar. This has led to their US treasury holdings reaching the lowest level in years, right? While ramping up their gold purchases because they want to back their own yuan with actual physical gold-backed purchases, right? And this makes people have faith in the yuan because they know that it's not assets or they can't just keep printing money. They are backing it with actual physical goods. So gold has been on a climb, on a tear recently, partly also due to countries like China stocking up official reserves, right? They now have over 2,300 tons, if I recall correctly. And what they're also doing is supporting their own domestic bond markets because by encouraging people to have faith in the yuan and the bond and in the Chinese bonds, they are actually indirectly helping elevate US borrowing costs because it makes America's fiscal challenges even tougher. As the US continues to face rising debt and interest payments that are over 4% of its GDP, right? There are of course some long-time supporters like the UK who are still buying, but many others are pulling back, you see. Japan might still be buying, but they are also raising rates at the same time, and this reverses the carry trade. That makes the yen more expensive and more valuable than the US dollar. So it's really quite counterintuitive. And while China continuously dumps treasuries, where does this leave US debt? For Singapore, we're just a neutral party deeply integrated in the dollar system. Treasuries, of course, still remain a perfect fit because we're a long-time partner after all, and frankly, the yield is attractive. So Singapore's holding of US debt comes down to a few reasons, right? Strategically, it's about safety, liquidity, and yield. But of course, Temasek and GIC, Singapore's sovereign wealth funds, are also not stupid, right? If things changes, if we see the US debt being a little bit more unsustainable, and if we see people losing faith in the dollar, it might be just a flight to safety, you know. We just might move out of these US treasuries. So we might actually reposition more to gold, but since gold is a little bit high, and actually bonds are pretty low right now, I think they're making a decent choice. As always, if you want to learn more about financial markets or economics, do check out our website for our free newsletter and academic courses. Remember to like, share, and subscribe, and I'll see you guys next time.